picture. It was mixed on the day this after U.S. President announced plans to amend bans that were made on investment companies linked to the Chinese military. Nonetheless, when we look at that particular market, the Hang Seng a little lower, down 1.1%. When we look at what's happening in Japan, the Nikkei up 0.3%, but the Chinese mainland markets, the Shanghai Composite at this point down 0.3%, and the Shenzhen component following suit as well in negative territory, down 0.6%. As we look at what's happening with the European markets, they're a little bit lower along with the U.S. futures. Again, it is about this new twist when it comes to the U.S.-Chinese relations, as well as Fed comments in terms of reducing possible stimulus in the near future or not. But that conversation has been raging for the past few days or so, and we have analyzed it in depthly in terms of whether there seems to be a codependency between the markets and the Fed. But nonetheless, when we look at that particular market, at right now, the European markets, FTSE 100 down 0.8%. When we look at what's happening in Germany, German DAX down 0.4%, and the French CAC also in negative territory, down 0.3%. But to analyze the themes and various sentiments moving markets right now, we are joined by Owen Ngomo, who is from Nkunzi Wealth. Owen, thank you so much for your time.
Thank you for having me.
So let's talk about the JSE at this point. What do you make of its current performance?
It's interesting trading levels, these ones. We just come out of a month of May, which is usually a troublesome month in the markets. But I think that the most exciting thing is we have got out of that period has been the strength of the rand, which has caused all sorts of new interesting considerations for us playing in the market.
Let's talk about those interesting considerations, because you and I spoke off air about this relationship that you've seen between the rand and the oil price. So take us through that rationale.
Yeah, so as we all know, that the currency has got a very big impact in terms of several of our listed stocks, whether it's stocks that are listed locally or stocks that are listed outside the country, with the most impacted stocks being offshore listed stocks that come off when the rand strengthens. So we've seen some of these stocks come off quite considerably as the rand has strengthened all the way from from 16 and 15 and breaking through 14. So we have seen, the exporters taking a bit of pain for that, but the importers, on the other hand, are doing quite well on the back of a stronger rand. Obviously, because the major driver of their cost has come down quite significantly. And looking at the rate at which the rand is moving, we could anticipate that maybe in the next few weeks or so we might be trading sub 13. And hopefully, if the status quo remains the same, we might therefore start to ask or expect that the interest rate environment in the country will remain very accommodative for the foreseeable future.
A few weeks ago, and I think this is going to be a conversation that rages on for the next few weeks up until people understand the Naspers process, share swap, some described as a snake eating another snake. But the news that came out of process today was that they're buying a key ad tech player for 24 billion rand, a company by the name of Stack Overflow. It's a very interesting company. I mean, what do you make of that transaction?
It's a decent transaction. Remember, Naspers has said that they've reserved about 200 billion odd rands for such transactions, and this is one of the few transactions that they've gone to close out. This is a nice transaction that gives them access to IP of IT software developers and other guys in the development space, and they are plugging this money to access international IP, which hopefully might see them come across another 10 cents out there on this platform. It's a nice education platform for sharing ideas and for developing applications. And I think it's smack bang in line with what Naspers has always said they want to do, to basically the aggregator of all these smart ideas that will take us to the future globally.
Yeah. In other news, S&P coming out saying that it'll take at least 18 months for South African banks to return to pre-pandemic levels, especially when you look at their bad debt expenses. I mean, let's talk about the banks in general. What do you make of their current performance, and which particular banks will you be looking out for when they publish their numbers?
Yes, indeed. I mean, there's a lot of indicators that we'll be looking out for, particularly the performance relating to a very important metrics for the banks, which is bad debts. How's the bad debts metrics looking? Have people started to feel better about their pockets? Are they paying? What has the retrenchment environment done for the bank's balance sheets and things like that? We'll look at that, and then obviously look at whether or not revenues are starting to recover, or they remain under pressure. But I think that what will help the banking stocks is this relatively strong currency as well. If it does continue to be strong, we will back the banking stocks. But unfortunately, it's coming at the tail end of their second quarter, and it might not necessarily feed directly into their performance for the first 6 months of the year. But hopefully, we are going to start to see some recovery in the sector.
All right, Owen, thank you so much for your time. That is Owen Gomo from Ngunzi Wealth. Up next, we've got the labor force with Mbongeni Mutwa coming up after the break, so stay